Did you know that most traders make a mistake nobody talks about? Yes, it is focusing only on making money. But when a bad streak hits, they don't have something much more valuable: a system to handle losses. I want to completely reveal to you the methodology I use personally to recover from bad streaks. Imagine these 3 real scenarios which I have seen hundreds of times. Case 1. A trader with a strategy that wins 70% of the time, but when it loses big. The result? 6 months of profits wiped out in 1 week. Case 2. A trader who averages down their losses, adding more money to losing trades. The result? A 40% drawdown in a single trade. Case 3. A trader who panics and closes everything at the first sign of losses. The result? He never lets profits run and always trades with fear. And today I am going to teach you the exact strategy one use, which consists of 3 phases. Let's start with phase 1. Stop the bleeding. It is like a doctor treating a wounded patient. First they stop the bleeding, then they heal. And this is where our first method formula comes in. You have to close all your positions that are in profit and use that money to close most of your losses. Let's say you have profitable positions of $150 and losing positions of minus $200. We close the profits to get that $150, and we use that to pay off $150 of the losses. The result? We are left with only minus $50 in losses. This, even though it seems like it leaves you the same, is very helpful because, first, you are closing open positions. The more open positions, the more danger of continuing to lose. Second, you are securing the profits you have. Third, you are closing the majority of possible losses. Fourth, you lower your market exposure and increase your account margin. Fifth, you simplify all your trading positions. And finally, by reducing risk, you reduce your emotional decisions. Phase 2. Stabilize the situation. Once the bleeding is controlled, you need a stable environment to work in. In trading, that means eliminating immediate risk exposure. In this step, the formula is very simple but highly effective, and simply consists of having equal buy and sell lot sizes. Here is a practical example. If after stopping the bleeding in step 1, you have 0.5 lots of buy and 0.4 lots of sell remaining. In this case, the only thing to do is sell an additional 0.1 lots. That way we would have 0.5 buy and 0.5 sell. This achieves several things. It stabilizes your account with equal buy and sell lot sizes. You can no longer continue losing money, so we have stopped your drawdown. If the price goes up or down, you will maintain the same balance. It simplifies your total trading position once more. And again, by reducing risk, you reduce your emotional decisions. Phase 3. Progressive recovery. Here is the golden rule. Never try to recover everything at once. Divide the debt into small parts. Let's continue with the previous example. We have a loss of minus $50 with a total lot size of 0.5. But here is the mental shift. You might see a single 0.5 position, but the system sees 5 operations of 0.1. So, for a total loss of $50. The method consists of obtaining small profits to close small losses. Now we return to trading. We will place trades below and above the current price at high probability points, like support and resistance from higher time frames, with the same lot size we want to recover. When that trade goes in our favor, then with that same profit we will close one of the small losses. The probabilities are much higher than trying to recover everything at once, which is the classic martingale error. And we also won't use the classic grid, meaning placing trades at always equal distances. Instead, we will reorganize our positions in strategic, high-probability places, since we only need a small profit and not a large pip movement. Here we are talking about increasing our probability by increasing our patience. The difficult side of this strategy is doing it manually because it has 3 huge problems. Problem 1. Emotional discipline. When your account is down 20%, your brain goes into survival mode. Your instinct is to panic close everything or desperately double down. Problem 2. Time and attention. This process requires constant monitoring, and every decision requires precise mathematical calculations. Problem 3. Inconsistency. One day you do it perfectly, the next you fail due to fatigue, stress, or a distraction. Now I am going to show you exactly how it works with a live demonstration. I am going to activate a real drawdown in this demo account. I am going to purposely lose money to show you how the system reacts. For this test, I created the drawdown recovery system, which is this same strategy converted into code. Take a look. The same analysis we did manually. The same calculations I showed you. The same decisions based on pure mathematics. Watch how it executes exactly what I just taught you. Step 1. Reduce drawdown. It automatically closes profits, reduces the biggest losses. Step 2. Hedge. It balances buys and sells to stabilize the account. Step 3. Recovery. It initiates the cyclical recovery, opening small trades to close small losses. It is a complete tool designed to give you total control. First, an all-in-one control panel. Everything you need is on a single screen, from manual trades to automatic recovery management. Second, one-click configuration. The recovery system is one button away. Want to use it as your main strategy? One click. As recovery mode? One click. Third, total customization. From colors and themes to recovery algorithms, everything is adjustable to your trading style. Now you have all the information. You know the complete strategy. You know the real problems. And you have seen the solution working. Your options are: implement this manually since you know all its steps, or use our automated system and focus on what really matters, your main strategy. For those who want to try it, I have a complete free demo in the link below. And for those already convinced, there is a special discount for crypto lovers.